Hello and welcome to the look ahead for Tuesday, the 20th of August, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching for the minutes from the latest RBA meeting. In the European session, we've got Eurozone inflation data. We've also got Canadian inflation data. And in the US session, we've also got Federal Reserve officials Bostic and Barr, who are scheduled to speak. So just kicking off with the Eurozone inflation. Now, this is in fact the a secondary reading for July. It's not the principal reading. It's expected to confirm that inflation inched higher in July to 2.6%, up from 2.5%. The data comes, though, after we saw mixed data last week from the Eurozone, where we saw sort of the ZEW economic sentiment plunged both in the Eurozone and Germany, although we did see a confirmation of Q2 GDP at 0.3%. I think the data also comes as the Eurozone is weighing up when to cut interest rates again. I think if we're just having a look at the chart here, this is the Euro US dollar. Obviously, we're seeing US dollar weakness right now. The US dollar has fallen to 7-month lows versus its major peers on expectations that the Federal Reserve will start cutting interest rates in September. Obviously, the focus for this week is going to be Jerome Powell's speech on Friday at the Jackson Hole Symposium. I hate that word. Symposium in Wyoming. And anyway, expectations are for signals from Powell that the Fed will be starting to cut rates next month. Now, obviously, that's caused the weakness in the US dollar, which is benefiting the Euro US dollar, which is broken out of that rising channel within which it was trading for quite a few months. It's now trading at its highest level this year, above the 110.50 level. That's where we are. Heading towards 111, that's the next line in the sand, that's the round number. And then we've got that 111.40, which is the high we saw just at the end of 2023. On the downside, support 110, that's the psychological level to be watching out for. Then also this level here, which is the 109.60, which is on that rising, the upper band of the rising channel. So also, whilst we're here, let's just have a look at what's happening with the DAX as well. The DAX is currently, it's rebounded from that low that we saw at the beginning of August of 17,000, just above 17,000. It's risen above the 200 SMA, extended gains above the 100 SMA as well. Now we're looking for a move towards, this is the level I'll be watching out for, around the 18,800 level. That was the high that we saw in July, also the high that we saw in June, and then above there, look for the all-time high of just below 18,900 on the upside. Downside, immediate support, there we go, at 18,280, which was the 100 SMA, but really this level here would be the one to be watching out for, which is the 18,000. Now, I said we've also got data from the Canada. We've got Canada inflation data. This is the Canadian dollar, the US dollar, Canadian dollar chart. Now, as we can see, that again, that US dollar weakness is playing out, and it's pulled this pair lower. It's broken down below the rising trend line, which dates back to February. Also moved below the 100 SMA. Now we've seen sort of fairly strong bearish engulfing candles here. This is the next level to be watching out for, is 136. Now that's obviously not only support, which has acted as a support for quite a while across the last few months, but it's also the 200 SMA. So I think that could be a fairly important level to be watching out for. If we do get a break below there, then I'd be watching out here for around the 134.80 level. Again, it's a level that's offered support a couple of times, most recently in April, beginning of April. That was the April low, and also the December low last year. As far as what we're expecting from Canadian inflation data, it's actually expected to hold steady at around the 2.7% level. Now, obviously, the Bank of Canada, they cut interest rates in the previous meeting. there is expectation that the Bank of Canada could cut interest rates again in September. This is the final interest rate data that they're going to get before that 4th of September rate decision meeting. So disinflationary pressures are in full force in Canada, and so we're expecting potentially this data to confirm that the Bank of Canada are likely to cut rates again. Obviously, if we get a surprise to the downside, that's going to be boosting the Canadian dollar. Sorry, if we get a surprise to the downside, that's going to weigh on the Canadian dollar, and we could see a recovery in this pair. As far as any recovery is concerned, I think, sort of this level here around the 137.30, that was sort of, last week's late highs. And it's also that rising trend line support. That's going to be the level to watch. Just finally, let's take a quick look at what's going on as far as the S&P is concerned. As I said, we do have some Fed speakers tomorrow. There's growing expectation that the Fed, as I said, are going to sort of adopt a more dovish tone. They have been starting to sound more dovish. So, the market's expecting a rate cut to be signaled at the event this Friday at Federal Reserve Chair Jerome Powell's speech on Friday. And that is obviously supportive for US stocks, which have recovered from those worries of recession, which was sparked after that weaker than expected non-farm payroll data right at the beginning of the month. Now, we've seen this recovery from the low there, which was at 50 and 90, so just below 51, recovered above the 100 SMA, also recovered above this trend line, which has dated back to the beginning of November, looking to make its way towards the all-time highs of 56.22. That's the level to be watching on the upside. If we get more dovish remarks from Fed speakers, that's likely to help support stocks higher. But ultimately, we've got the FOMC minutes on Wednesday, and then we've also got the Jerome Powell speech on Friday, also PMI data on Thursday. So quite a lot to be looking forward to towards the end of the week, which could spark some volatility. However, I think trading in the beginning part of this week is likely to remain cautious. So that is all from me. I hope you like what you've seen. If you do, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.